Hello everyone and welcome to the channel. My name is Brent and in today's video we're going to go ahead and cover the M1 Finance Roth IRA portfolio. We're going to hit 5 topics today. We're going to go over the overall performance of the M1 Finance portfolio, the week performance as far as what stocks were up, what stocks were down, how did our portfolio do in comparison to the main 4 indexes. Let's take a look at the past few bits of activity as far as what was purchased, what was sold, the dividends that had came in, the total amount that we're going to be investing here today, and then we're also going to be taking a look at the current dividend income of the portfolio and show you guys how you guys can track your very own dividend income completely free, what stocks are coming up on ex-dividend, when they will pay out, what months they're going to be paying out and such. So we'll go ahead and cover that a little bit here in today's video as well. So if you guys are brand new here to the channel, definitely go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video, and of course give this video a thumbs up, make it blue, and let's go ahead and get into the video. Now we can see here as of, looks like about 2 months ago, the portfolio has been essentially trending sideways. We hit about 36,000 here, and then we had peaked about 38,000, and then we kind of been within this little sideways trend right here. So jumping over into where we're currently at, as far as invested capital, we have $37,517 invested in the market at this moment. We have a cash balance of $442.94, and that is all going to be invested here today. As far as the overall performance of this portfolio, the total return is up roughly 65.58%. So we have pulled back slightly off those highs. I think at the highest point that I remember seeing was at 77.7. I just remember 777. So here we have pulled back slightly, but really not a big deal here. Over the past 1 month, we can see that we are still down roughly 3% off those highs. Over the past 1 week, actually, let's go back to the overall. Let's take a look at the best performers and the worst performers. So right now, looks like the top 3, Apple, Lowe's are generally 1 and 2. Main Street Capital, ABM Industry, and Avery Dennison. These 3 right here have been fighting for 3rd place for quite a while. So it looks like Main Street Capital recently surpassed ABM Industries. And as far as the worst performers down here, we have Clorox down a whopping, I don't think that's correct because I put $2,000 into this, so I don't think it's down 37%. But it is down the most in the portfolio right now. Hormel Foods down right behind it at 15% there, and Colgate. All 3 of these positions were added in this year, recently within the last 3 to 6 months. So no big deal between these. They're going to have some short-term volatility. I kind of bought them as they're trending lower. There really was no sort of end in sight. So a lot of these, such as Hormel Foods, they just continue to break to new lows and new lows and new lows. And right now, I have to kind of do a little bit of checkout to see when these will show signs of recovery, and then maybe buy up a little bit more into each one or specific ones here. Jumping over into the 1 week activity, we can see that this portfolio is up roughly 0.49%, $162 of market gains, and we made roughly $18.67 of earned dividends, which is dividends that we sat through the ex-dividend date, but we have not been paid out these dividends yet. They'll just be paid out in the future. So sometime in the future between, whenever the ex-dividend was, in about a month, usually we will receive those dividends from a few companies out there. Now, how did we do in comparison to the 4 main indexes? Well, the S&P 500 put on a very nice gain here on Tuesday, after Monday's sink. I thought this Monday here, this dropped us below that 52-day moving average. I was kind of interested in seeing where we would end up at here on Monday. Would we trend down lower? Would we trend, break down really hard? But actually Tuesday, we had a huge recovery on Tuesday, a bit of a dip on Wednesday throughout the, midpoint of the day. I forgot what it was. I don't think it was jobs. I think job numbers came out Thursday. It may have been Wednesday, Thursday, but something was announced there. And we can see a huge run up towards the end of the day into the after hours. Immediately after hours, everything was bought up, opened high, stayed pretty consistent and closed. And then here on Friday, broke down just slightly, but this is showing, it's not as bad. It's not dropping off a cliff down 1% or higher. But we can see here stock futures are kind of settling in the negative at the moment. It looks like they're escalating there. So we'll kind of see how it opens up here on Monday. I'm pretty interested to see how that kind of opens up. And it doesn't always mean it's going to remain that way for the remainder of the day. We can see here that if we do drop, say, 1 or 2% on Monday, we could quickly recover 1 or 2% back throughout the week, ending positive. But we'll see. So 5-day up 0.79. The Dow Jones put on a nice 1.22% gain right here. The NASDAQ essentially staying flat. A lot of the tech companies, Facebook especially, got hit hard. I think Facebook is down massive off their highs, just due to quite a bit of issues going on with them right now. The Russell 2000 was the only index of the ones here, the four main ones, that was down this past week, down 0.38%. So if we put them in order right now, you can see here that the S&P 500 now is number one because of that big drop in the NASDAQ here recently. NASDAQ is now at 13.12%, now getting beat out by the Dow Jones. So here we have the S&P 500 in first place, followed right behind by the Dow Jones at 13.53, the NASDAQ at 13.12, and the Russell 2000 at 13.08. And let's go ahead and take a look back over here. Now, jumping over into as far as, positions here, Facebook right here. Facebook down this week 3.78%. We also see the rest of the FANG stocks did fairly well. Apple up 0.17, Amazon up 0.16, Microsoft nearly up 2%, Oracle right there, big old green, up 5.18, Tesla, Home Depot, Nike. Pretty interesting mixture. Kind of looking at the graph here, there's not really any one sector that got hit extremely bad. Within healthcare, we see that the biotech, the medical instruments are a little bit red in here. But as far as the sector overall, healthcare, we can see that it's pretty positive versus negative. Just a few of the, what are they called? The credit services, they were all down. Visa slightly down, MasterCard, PayPal. But that's where we had a pretty positive week. A lot of the financials are pretty positive. A lot of the tech companies outside of Facebook were pretty positive. We saw oil do really nice this past week. Both, oil, Exxon, Chevron, and the oil and gas energy area. So all across the board, pretty positive right there. If we're taking a look at year to date, I want to take a look at Facebook here. It's still positive by 20.83%. Google, check that out. Generally, I don't see a lot of growth on a yearly basis on Google, but here on the year, it is up a whopping 59.51%. Amazon essentially flat at 0.97. So that's pretty interesting. I wasn't expecting to see Amazon have that little of growth within a year. So pretty interesting right there. Jumping back over here, as far as the activity, we haven't purchased anything since back in September. We haven't made any buys in October. The last thing that we bought here was Colgate, and that's a position that has been recently dipping, but the whole market has been dipping in that same time frame. The recent dividends that we've received here have been Digital Realty Trust, $5.91, UGI Corporation, $4.89, Kimberly-Clark, that's a pretty nice dividend right there of $12.87. And then the final one that we recently received was Merck at $16.14. So since we've done our last update, we've received $40.10 in dividends from just 4 companies. So that is pretty good right there. And that all kind of tallies into our total amount that we're going to be investing today. As far as the portfolio's current dividend income, this is current. So the total portfolio sits at 37,517. So 37,515. This is just a few partial fractional shares that's missing. Now, if you guys are interested in tracking your own dividend income completely free, then you should head over to trackyourdividends.com, sign up, it's completely free. You can go ahead and begin to add your holdings, add your portfolios in here, and you're going to get a breakdown of all the portfolios that you add within here. You can see their dividend income, their yield on cost, their annual income. So this M1 Finance Roth IRA portfolio makes $1,074 right now. It has a very low portfolio beta, meaning that in comparison to the S&P 500, it actually moves up and down a little bit slower. So during downturns, it may not fall as fast and as hard, but again, on the uptrend, it also reacts the same way. It doesn't always go as fast or as sharp as the S&P 500. So that's how that beta there works. Now, taking a look here at the portfolio back over using Seeking Alpha, if we head over to the dividends tab, here we can see which companies are coming up on ex-dividend by selecting the ex-dividend date. So here we are in October. On Monday, it's going to be the 11th. So we have AbbVie, which is going to be coming up on ex-dividend. We have Method, Hormel Foods, Lowe's, Clorox, and Colgate right there, Main Street Capital. So we have quite a few that are coming up on ex-dividend. I had actually made a plan. Let me go ahead and see here. Let me pull up another tab real quick. That I did want to have a few of these positions up to a specific point, like Hormel Foods, even though it's been dipping here. Let me go ahead and bring that in now. Hormel Foods, Colgate. Let's go ahead and see what they're kind of looking like right now, because I really haven't been looking at the market these past few weeks. I've been watching it. Okay, we can see here Hormel Foods has showed some sort of signs of recovery. We hit that bottom here recently, 52-week low. We can go take a look here really quick. Hormel stock. So 52-week low is at $40.48. So we can see here that it was just recently hit right here on September 23rd. And as of that date, it's been putting on roughly 2.61%. So we are seeing an uptrend in Hormel Foods right around this point right now. But we're not showing, we could kind of wait it out a little bit longer, or because it's already negative in the portfolio, we're investing it in already. We could always just add a bit more into it. That just kind of lowers down our unit cost. It increases our yield on costs and such. This one, Colgate right here, continuing to break down. It did hit pretty low here and recently bounced, but I want to see a little bit longer recovery here. We can see here that there are times when it bounces, it just kind of quickly recovers up. And then, what was that, earnings? I think earnings is here, that sharp drop right there. And it's been sort of downtrending for a while. I think Hormel Foods looks a little bit better here. Double bottom right here, higher double bottom. This shows sort of signs of recovery right here. I don't mind buying up more Hormel Foods in this area at $40. That's pretty crazy. And Hormel Foods here has 21 years of growing and paying out dividends. Their 3-year growth rate for their dividend is 9.72. Their 5-year dividend growth rate is at 11.56. And right now, as you're buying into them, they have roughly a 2.32% starting yield, 3.32, 3.35, and their 4-year average yield is at 1.94. So I have no issue buying into some Hormel Foods here, and they're going to be coming up on ex-dividend here on October 15th. AbbVie is another one here that recently pulled off their high. So AbbVie is offering a 4.57% yield. I remember when AbbVie was offering that 6% yield, that was pretty good right there. As far as, let's go take a look here at the portfolio. And as far as the negative, we just had those three: Colgate, Hormel, and Clorox. And I'm not interested in buying any more Clorox at the moment, but we could definitely take a look at what it's looking like. What's the price here looking at? Yeah, there's really no end in sight, And this could be said with Hormel Foods. This is kind of showing it's showing a little bit of recovery, but it could just end up just like Clorox here. It could show that it has a double bottom here with the second double bottom here is higher, but then as it tries to recover, it could just break down and come back lower. But we can see here that it's forming support at this 163 mark. So if you're invested in Clorox long term, this you could see that it's building some sort of support here at that $163 mark, and you could buy up a little bit more here at support, or you can kind of wait for recovery. Wait for it to break above its 50-day moving average at 167, stay above it, close above it, and buy then. Once it's closed above its 52 moving average, that could be a better bet. So Clorox, I'm going to go ahead, hold off on that one. Hormel Foods, I'd be pretty interested in that one. Now this right here, the trackyourdividend.com, this also shows you your expected upcoming dividend income. So I can go in here and take a look at my weakest months right now are November and December. So Hormel Foods should be right within here. Ticker symbol with an H right there. So right now, Hormel Foods is roughly going to pay me $6.25. I wanted to bump this one up a little bit more. That way I can kind of average it about $10, $15 per payout. So I would like to get Hormel Foods up to a good position. Apple, that one will never pay more than $10 at a time. There's just not enough equity I can push into that one as a really low yield at the moment. Clorox, Lowe's, Main Street Capital, Realty Income. Yeah, so I'm pretty happy right now based off what I can buy. Well, what I have negative. I don't really want to average into any positions at the moment. I think I kind of want to use the opportunity of the market being kind of beat up, and then the recent downturn of Hormel Foods. I think we're going to go ahead and just average in the total amount here of $442 and change. So we're going to go ahead and paste 442, continue, and confirm. And boom, we've submitted the order. So this will all happen here on Monday. It's going to go ahead and get bought up. Yeah, we can see I had a pretty positive day on Friday. So we'll kind of see how this one kind of plays out here in the future. I think it's showing pretty good signs of recovery. It's been downtrending for quite a while. If we're looking at the 1 year here, a big downtrend here over the last 1 year. I've just recently started buying up into it. So while I am down slightly at 15%, I don't think it's really that bad of a loss there. $136 that I've lost in the time frame that I've invested in it. I'm not too worried there with it. So that is going to be it as far as the M1 Finance buys. I did just want to do a quick mention here. Bitcoin within the last 1 week is up 17.81%. So here it actually broke above that $54,000 ceiling that it has had for a little bit. It's at $56,822. So if you guys have any Bitcoin, Ethereum, Litecoin, those are my three. Definitely pretty interesting to kind of watch them. I've been having my crypto over on BlockFi. And I think that's about it. So let me know down in the comment section below if you guys have any comments or questions. Otherwise, thank you all for tuning in. Really appreciate it. And if you guys haven't yet subscribed, definitely go down below. Hit the red button here to subscribe. Make it gray. Hit the bell to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue. And I will see you guys in the next video. Bye-bye.